Hi, I'm Stephen Carson, coming at you from St. Louis, Missouri, in these United States. Please share our stuff, like it, all that kind of stuff, please. And we're broadcasting live to YouTube and Twitter. I personally have been actually listening to video more on Twitter than YouTube lately, which is not something I expected, but YouTube has failed in their YouTube app, your YouTube mobile app, which is when I'm mostly listening to video. So it's terrible, and it's almost unusable at this point. So I watch video on Twitter, and it works out pretty well, except it forgets my place. So I have to take notes of where I am on long videos, which is annoying. But anyway, okay, let's see. Support for the show gratefully received at Subscribestar, which you can see in the YouTube video description. Most people give $5 a month, but it adds up, lets me pay my bills for the show. And that's it. Let's see. Okay. We have Black Horse today. Thank you, sir, for joining.
Good to be back. I'm glad to have you back from, I guess you were at Mises, well, on our off week. So that must have been interesting.
Yeah, it was one of the weekends. Yeah, I had an OGC get-together and Old Glory Club get-together, and then I was at Mises in Auburn. And that was greatly entertaining because my friend Marcel and then Hans Hermann Hoppe, some might have heard of him, both gave extremely spicy and funny speeches. And if you go to my Twitter account, you'll see that a friend of mine put a little clip together of Hans talking about the Frankfurt School. And another friend, if you look at the replies, was very unhappy with it. So anyway, fun.
There you go. Well, we're working today off a new audio setup, so people will have to complain about the things I say instead of the quality of the sound in which I say them. So we'll see how that goes.
It sounds better in my ear, so we'll see what the folks say. In fact, I don't even have the chat where I can see it. There it is. Okay. All right, so we are back in Econ Minis mode. We're not going to do a bunch of tiny stories. Basically, going to do two. But we'll finish with, as promised, the sorry, got the first comment about your mic in the chat. You might want to look at that.
Yeah.
Anyway, we will, as promised, finish up with the big headline story, which is, I guess, partially in response to Academic Agent's video this week, where he talked about the U.S. economy being in a bubble. There are... But it's not just that. There, you've got, I kind of referenced it in the marketing, Black Horse. You've got Trump saying, best economy ever, as usual, right?
Yeah.
So I feel like, if you kind of put AA's, the U.S. economy is going to collapse versus Trump's, it's the best economy ever, we can kind of weave a path in between, maybe,
Well, I think there's like... The thesis of AA's video is that the divergence between the U.S. economy and the rest of the G7 is bubbly. That's different than saying the U.S. economy is like entirely built on smoke and mirrors.
Right.
But there's, I hate videos like that because it's a title, but the actual claims in the video aren't quite what the title suggests that it might be.
Yeah.
Right.
He's running a business now. He's living off this stuff, so his titles have gotten slightly more clickbaity.
There you go.
Content's great, but you gotta watch those titles. Yeah, he's having fun with the titles.
There you go.
Yeah. Okay. So anyway, we will get to that, but wanted to start with agriculture. And do you remember? You said we couldn't find what inspired this in the first place, but what was the gist of it?
Yeah, somebody dropped actually this chart specifically in a tweet somewhere on Twitter. Somebody I don't know or follow particularly.
Wait, I'm sorry. The first one that I should be bringing up?
Yeah, the first one.
Yeah, the trade balance.
And it's unusual that I see a piece of trade or economic data across my timeline that I'm just, is very surprising to me.
Hmm.
Don't connect with at all.
Right.
But this was one of them. And at the time, we
Yeah.
kind of filed it away and said, what's going on here? Maybe we should look into this more deeply. So, as our viewers should be seeing on the screen now,
Yep.
um, the US balance of trade for agricultural goods has tipped massively negative for the first time. I mean, the data here goes back to 1967, but my guess is if you were to extend that back, uh, I'm not even sure you would ever find a time where the U.S. trade balance in agricultural goods was negative
Yeah, I mean,
in American history.
famously, we were like exporting wheat to the UK after the corn laws were gotten rid of, right? They were
Yeah,
importing wheat from the US and things like that, right?
yeah, no, it's a huge part of the history of the United States that it has been a breadbasket for
Yeah,
agricultural goods um, to Europe to the world more generally. So this was a very surprising trend, and so we thought we'd dig into what some of the pieces were. So my
yeah,
first
and
thought,
but real
okay,
quick, I just want to describe verbally the chart. I know that for myself, I'm sometimes like working out or something and not able to look at the
yeah,
screen very well. Just real quick, it's kind of what you'd expect, mostly positive through. I guess each bar is a year. I think.
each bar is a year,
Each
yes,
part is a year. Okay. Yeah. So it's mostly a positive. That is, we're exporting more on agriculture than we're importing the U.S. For up until 2019, something like that. And then it goes negative for like the first time ever, maybe. Very slightly, though. So,
yeah,
some years were a little bit closer to zero. So maybe don't make much of it. But then the last 3 years we have, which I think are 2022, 23, and
22,
24.
23, and 24
Yeah, it drops
are,
down as negative as it was positive in the past, which is a stunner. Just a stunner.
yeah,
What are we
and
importing?
just from magnitude here, this is a shift. In 2010, the U.S. was a net exporter of something like $40 billion worth of agricultural goods, and in 2024, the U.S. was a net importer of almost $40 billion worth of agricultural goods.
Completely
So
flipped. Well, I'm sorry, the
that's
chart says it, but it's absolutely the right thing to say. The trade balance, U.S. agricultural trade balance, has completely flipped negative. That is, as much as it was positive, it is now negative.
yeah.
Done in. So, what's going on, sir?
Well, so the first place to look was to see if agricultural yields and exports were down. So if we pull up our next chart here, we'll
Yeah,
look at exports, and you can see uh, the total value of exports here split into bulk products and high value products for agriculture. Interestingly, the U.S. has become, in terms of dollar value, high value exports are more important to the U.S. balance of trade than bulk goods. But both are down slightly in 2023. There's no data for 2024 by the U.S. Department of Ag yet.
all right.
Um,
But nothing
but
dramatic.
we're not looking at a dramatic change in exports that would explain the trend we're seeing. We're seeing exports at higher levels than they would have been in 2008 when there's a huge net positive balance of trade, a huge excess of
Right.
exports over imports.
Yeah,
So
and
that's
and
not
and real quick, sorry, this is sometimes I have to remind you to explain terms of your industry here. Bulk. What does bulk mean?
bulk means high volume, low value per unit.
Okay.
So
Okay.
bulk exports in ag are like corns and grains of various kinds.
Right. Right.
Um, Whereas high value products tend to be processed products, products that per weight carry a high value.
And so with bulk, I would expect, unlike high value, I would expect that transport costs can really change the game quite easily because if you're going to ship a you know whole ship full of grain, it's
Yeah.
mostly about the cost of moving it, right?
Yeah, at least the cost of moving it is a huge input.
Yeah.
Um, and one of the thoughts that I had going in is maybe some of this Panama Canal nonsense that's going on
Right.
has played into it.
Yeah.
Maybe there's some shipping problem. That's not really the case.
Mm.
Um, I mean, you have a decline in the value of bulk exports, but it's not explaining the trend that you're seeing.
Yeah. No way. It's very.
Equally, if we look into the data as to what makes up that mix of high value exports from the US, it continues to be the processed foods. There's really not much change in the export mix in the
Right.
period in question.
Gotcha.
So if we flip to our next chart here, the next chart is looking at, so if it's not decrease in value of exports, then it has to be increase in the value of imports.
Right.
And so this again from the US Department of Agriculture. And we see here fairly steady imports of bulk products, very,
Right.
very small item coming to the US. But we see parabolic increases in the value of in the amount of high value imports coming to the US.
Yeah, and I just want to note real quick. This is not like something that happened in the last few years. This is a very kind of a smooth progression for everything the chart shows us, which is 30 years about.
Yes.
Yeah.
But if we were to put the two charts together, we would see that between 94 and 2008, there's fairly close correlation between the increase of value in exports and imports. So
Mm-hmm.
probably a monetary phenomenon more than anything else. Whereas in the post '08 world, where until 2020, there's relatively little inflation, you see continued parabolic growth in the value of imports, but flatlining in the value of exports.
I'm just going to flip back and look at that real quick. So, like 2008.
Yeah, maybe.
Okay, well, I see the exports
Sorry.
going up until 2013, and then
2013 is maybe
Yeah,
the right spot to
Yeah.
mark the change.
and then it kind of flattens a bit on the exports while it keeps climbing dramatically since 2013 on the imports. Huh?
Yes.
What does it mean?
And specifically since 2021, the value of the high value imports have really gotten out of control. So there's like a 25% increase in the high value imports between 2021 and 2023.
Right. It really goes like, well, it's, yeah, I'm having trouble. Wait, so that's 23. So it's actually 2020 to 2022. It starts to almost go straight up.
Yeah, and if we had data for 2024, given what we know about the balance of trade, it's very likely that this goes up again.
Yeah, even more up, right?
So the interesting question to me is what high value products is the U.S. importing, and what high value agricultural goods is the U.S. importing to make this kind of thing happen?
Did I forget to mention the caviar fad that swept the Midwest? No,
yeah,
I made that
up. So if we flip over to the breakdown by commodities.
This is, sorry, we had a similar chart. That was exports. Now we're looking at the imports, right?
Yeah.
Yeah.
So imports here, again, we see a relatively consistent product mix, but we do see some relative inflation of the so-called processed products category, which used to represent a smaller fraction of the imports of high value commodities. Again, this is all U.S. Department of Agricultural categorization.
Yeah.
So the next logical question, what the hell is a processed product in agriculture?
Yeah.
So fortunately, they do tell us a little bit. And interestingly, for our friends on the online right, it's the import of processed seed oils that leads the way. I don't really know why this has gotten...
this is the Newman meme from Seinfeld, right? Seed oils.
Yes. I don't really know why this is a thing, but I mean, apparently the import of seed oils is it's up to grain and oilseed milling products is up to like 57% of imports in
that value share of consumption, right? Yeah, and sorry, let's just make sure everybody's thinking about this, right? this is not, don't think tons, think dollar amounts, right? So, we're still exporting and importing large amounts of cheaper stuff. This is
Yeah.
the expensive stuff that, if you break it down by how much money is being spent on imported products, it's a bunch of grain and oilseed milling products, whatever the heck that is.
Yeah. And again, the US Department of Agriculture helpfully cuts the data off at 2021,
Mm.
because, of course, that's how they do it. But the relative increase in share of seed oil products and sugar and confectionery products and canned fruits and vegetables appear to be responsible for a lot of the change.
Do you have any idea what a grain and oilseed milling product would be, for example? I'm,
Uh, al- well, I think some of this is the olive oil price fiasco of the last few years. So
ah,
this is one thing you probably actually have seen at the grocery store.
yes,
Olive
we
oil
we
should
we
now,
exclusively use olive oil at our house, actually. So yeah, I've noticed this.
yeah. So like it should now basically be locked up behind those glass cabinets. It's so precious. So
Yeah. We
again,
went
this
we
is
went we went Spanish. I mean, to my shame, we no longer
yeah.
buy Italian olive oil. We buy something from Spain that's a little more reasonable, but still pretty expensive.
Yeah, so I don't really know exactly. There's a number of theories as to why the price of olive oil has accelerated so much, but I think that's a big component of this, because olive oil is an overwhelmingly imported product.
The Corleones, you may
Yeah,
not remember,
they're
but they were in the olive oil business.
yeah, yeah. So I mean
Really? Like
that's the
olive oil, and
explanation.
what else would it be besides olive oil?
Well, it's olive oil, it's canola oil, it's all of this crap
Okay. Yeah,
that's
yeah,
being
yeah.
used in processed foods. Um, so that's interesting.
So wait a second. When all these right wing health guys are inveighing against seed oils, they don't like olive oil. Olive oil is
Uh,
great.
I I don't really know exactly what their theory is. I don't think olive oil is seed oil in their thinking, but
Okay.
in the thinking of the Department of Agriculture, it is. So
Okay. No, olive oil is not a seed oil. It's a fruit oil extracted from the olive fruit, not the seed. There you go. We're safe. We're safe from being
there you
attacked by
go.
right wing Jim Bro mobs.
Yeah, there you
Yeah.
go. Anyways, I found that quite interesting and
Yeah.
very surprising. Um, but apparently that's a thing. I'm also very surprised that like seed oil products are considered high value goods by the US Department of Agriculture, but what do I know?
Yeah. Yeah.
So
It's
there you
they're
go.
looking at using Austrian speak, uh, sort of higher stages of production, right? So if you've
Yeah.
got
Yeah.
a raw material that they're having to process uh, in three different stages to get to something, that's going to be lower down on the list here, right? If you've got something that had to go through a bunch of processing before we import it, that goes into the processed or manufactured products. And I guess olive
Yeah.
oil involves several stages of production before.
Stages of production, I
Yeah, yeah,
guess.
right, right. Now there, you did have one more chart. I don't know if you remember, U.S. agricultural imports in billions of dollars.
Yeah, again, same data, different representation because the
Yeah.
USDA representation is horrible. Um, but again, you can see the expansion of this gray bar, horticultural products and oilseed products.
Mm-hmm.
Um, and it's really this oilseed product bar that's getting out of control, particularly post 2021. And as I say, I think this has to do with prices in certain. I don't know why the olive oil market is the way it is, but I think it has affected this balance of trade quite a bit.
U.S. ag horticultural products. What would that be, and why is it such a huge component of the dollar
Uh,
value here?
yeah, so horticultural products is like anything that's not grains and feed, but comes off a plant.
Okay.
So that's so again, different categorization group. So I'm not exactly sure because again, this is from the Census Bureau instead of from USDA. So
Okay,
they have
I
slightly
found the
different.
article that explains the chart. Horticultural
Yeah.
products drive total U.S. agricultural import growth. U.S. Department of Agriculture. It's a broad category. Horticultural products, a broad category including fruits, vegetables, spirits, wine, essential oils, tree nuts, and nursery stock.
Yeah. So
Wine and spirits being in there might be a little bit of a giveaway.
yeah, although wine and spirits well, I guess we're looking exclusively at the imports picture because I
Yeah.
have the impression that the US is an exporter of wine and spirits or a net
Mm.
exporter of wine and
Yeah, like
spirits.
California wines and yeah.
Yeah, but I don't know if that again, that's an impression. I haven't it's very I did not expect it to be hard to find this data, but it actually is quite difficult.
Hmm.
So
Yeah,
there you
this is
go.
challenging for me, the wine thing, because California has really just I go to a nice restaurant and they've got a bunch of California wines a lot of the times. And I'm a little bit of a wine snob and usually want wines from Germany and Austria or
Oh, really? Okay.
France or Italy. And I notice that like they'll still be there, but there's less and less choices from outside the country. More and more they're just offering California wines.
Yeah, well, it tends to be, in my experience observing wine drinkers, it's either they're California wine drinkers or they're European wine drinkers,
Mm,
one or the other.
interesting. Huh. Okay.
But
I've
anyways, there's your decline in U.S. balance of trade in agricultural goods story.
yeah.
Um, Very surprising result in my opinion. I'm not. I don't think this is good. If I was the Trump administration, I would be looking at this as problematic, and I would be looking at
Hmm.
like one of the other sub stories here is that um, U.S. agricultural production continues to centralize in these very artificial farms in California, and
Yes.
the percentage of American arable land that's in active production continues to decline, um, particularly in the East and Northeast and
Yeah.
in the Midwest. And just from a strategic point of view, I think this is very short sighted. And I think the Department of Agriculture would be well advised to look at this and consider the change in balance of trade as a wake up call that relative prices of different commodities can change and relative demand can change. And so having a more diverse agricultural footprint is probably in the strategic interests of the United States.
Yeah, and just to home in on the California thing, I haven't done a big study of it, but my understanding is that a lot of that is has an artificiality to it because like wine production in California, because it's heavily subsidized with scarce water,
Well,
scarce and expensive water. So we don't actually know if some of these things are profitable because they don't show on their balance sheet, on their profit and loss statement, how much everybody else is subsidizing their water, you know?
y- yeah, I mean, wines are a different thing in some to some extent because it's Northern California. It's really the Southern California agriculture. Uh,
Okay.
a lot of fruit, a lot of dairy um, comes from this area where you get sunshine like 340 days a year, and you can
Mm-hmm.
bring in water from Northern California on a subsidized basis. And it's a very fragile system.
Yeah.
Um, because you're bringing the water from very far away. You've got a lot of points of potential failure. California is in constant battles over water management, and this method of agriculture is a lot of the reason why.
Vorpal Anvil says, been getting harder to find my Spanish cava for years now. I feel you, buddy. Okay.
There you
um,
go.
all right. So let's move on to our next story, which is, like I said, well, you tell me what your inspiration is. I brought up Trump, sort of bigging up the economy. And then AA, I guess, making the point, the nuanced point, as you said, that um, it appears that the U.S. economy is doing really great relative to the European economies, and he's not quite buying it. Um, but yeah,
Yeah.
what had you thinking about this story?
Well, so this is something that this divergence between the U.S. economy and the other economies of the G7 is something that I've paid a lot of attention to. I was surprised to see AA make the set of comments that he made.
Hmm.
Um, my impression has been, because I think those comments undersell the deindustrialization of Europe as a consequence of the European energy crisis.
Which we've
And I think
discussed this before, the Nord Stream destruction, et cetera, et cetera. Yeah.
Nord Stream destruction, the sanctions on Russia,
Yeah.
uh, generally the scarcity of electricity. I mean, the scarcity of electricity in Europe is more than just the last couple of years. There's the green programs have been
Right.
strangling heavy European industry for quite some time.
Yeah.
So I was surprised to see, from that point of view, the divergence between the US and the European economies doesn't surprise me. Um, Add to that the oil and natural gas boom that we've seen in the US, and it there's an intuitive sense in which it seemed to me that the U.S. economy was likely doing very well relative to its competitors. Add to
Right.
that my experience working in the U.S., where there's a palpable impression that particularly the sort of top 10 or 15% of US society is doing a lot better than the top 10 or 15% of either British society or Canadian society, like
Wow.
a lot better.
Wow.
Um, so the comments that he made really surprised me. I thought it would be a good opportunity to level set about this issue um, uh, in a couple of different respects.
Right.
Um, so whenever there's some dissonance between comments made about an economy and my sort of intuitive sense about an economy, uh, I like to go back and look at the tangibles
Yeah.
and try to take dollar value as much out of it as possible, because money supplies get manipulated. They're
Yes. We
and
all know this. Yes.
we all know this. So when
Yeah.
you're looking at dollar value of something, it's always a bit of a challenge. Um, so
Yeah,
the more,
and coming from an Austrian point of view, we're always very aware of dollar money supply manipulation, right? But I think there's a logical category that we shouldn't exclude, which is there's inflated prices because of money supply inflation, which academic agent emphasized that in his video, if I remember correctly. So
yeah,
many trillions of dollars injected, right? You can
but
have money supply inflation while also having significant real production of goods. You can do that at the same time, right? They aren't necessary. Well, the business cycle theory of the Austrians explains why this can get you in trouble eventually, but
but
they
the fact
can
that it can get you in
coincide.
trouble doesn't mean that, like, one of the things that coming from the industry that I come from is very
Yeah.
obvious. There are market stories and then there are economy stories, and they're often very different stories, right?
What's the market versus the economy?
So the flash crash of 2011 is a market story, right?
Mm-hmm.
For 20 minutes, a whole pile of U.S. equities traded down like 50% as a consequence of some anomalies in trading patterns. That's a
Yeah.
market story.
Right.
20 minutes later, the markets are back where they were, and everybody in the real world doesn't care about that story, but it makes
Yeah. Yeah.
enormous ripples within the financial world.
Right. Right.
And then
Wall Street cares, Main Street doesn't. Basically.
exactly,
Yeah. Yeah.
and those stories are really very common. So I think, and when you're dealing with manipulated money supplies, uh, it is as common as not that the consequence of the manipulated money supply becomes a market story rather than an economy story. Um, and so I
Right.
just think let's come back to fundamentals. Let's level
Yeah.
set on the U.S. economy, and then we can maybe speak to this a little bit more intelligently.
Right.
So if we go to our
Okay.
first chart,
Yeah. Steel.
yeah. So fundamental industrial commodity here. Where is U.S. steel production? Well, it's down a little bit from its peak in the uh, late aughts,
Hmm.
but we're not talking about a collapse kind of situation.
Yeah.
So we flip to our next chart here. So U.S. crude oil production, if you've been a follower of this channel, you'll know that in the period since about 2009, U.S. oil production has radically increased from about 5 million or 5 million barrels per day, or sorry,
I think you're reading that right.
yeah,
5,000 would be 5 million.
5 million barrels per day to about 13, 14 million barrels per day. So
Wow.
more than getting close to tripling of U.S. oil production in the period. Um,
Wow.
and in this period, the U.S. has become a net exporter of oil, which
Hmm.
is that's a profound improvement in the economic condition of the United
Yeah, and
States.
maybe we discussed this when we discussed this on previous shows, but I guess it's just striking me that this would have potentially geopolitical implications because no blood for oil, and we're in hock to the Saudis and we got to be nice to them and all that. Well, if we're not importing and we're exporting oil, does that kind of change that political calculus a little? I don't know.
Well, if you had if you had hard-headed Machiavellians in charge of the U.S. empire, it certainly would change that political calculus.
Yeah,
Um,
right,
the extent to which that's true is,
right.
somewhat outside the scope of this analysis. Let's put it that
Yeah,
way.
yeah, yeah. Gotcha.
Uh, but this is a profound positive sign for the U.S. economy for sure.
Hmm.
There's a comparable chart you could write for natural gas.
Okay.
If we flip forward, so we're looking now at another classic proxy for industrial development. This is electrical generation, all sources. Um, Interestingly, between what is that? 2000,
2007,
yeah,
2021.
2000.
Yeah.
So we have a long period of stagnation in U.S. electrical generation that looks like it's finally starting to break.
Hmm.
What this indicates to me is that the narrative of reshoring is actually real to some degree.
Hmm.
There is some increase in U.S. local industrial activity, and it's reflected in electrical generation and concomitantly electrical use.
Yeah, and
But
Black Horse had explained to me, folks, that of course you're probably looking at this thinking, well, how much is this consumers versus industrial use or business use, and I don't know if this particular chart does it, but you're saying that they do sort of factor out population growth, which would kind of give you the growth in consumer use, so that you can kind of take a better stab at industrial growth. And when you look at it that way, yes, industrial use of electricity is up, right?
yeah, a little bit, a little
Yeah.
bit.
Yeah.
Um, and if we flip, this is a data point. You're looking at proxies for industrial activity.
Right.
So let's flip forward here. So we're
Vehicle
looking
production.
at the auto industry here. So again, the auto industry is, we're not looking at a great period. We're not looking at a terrible period. The
Hmm.
last couple of years have been a little bit better, but um, you know what that chart is showing you is not a flourishing American economy, and it's not an American economy that is on its rear end,
Yeah,
somewhere in
yeah,
between.
yeah, yeah. And I'm sorry, that 2009 massive dip. Do you know what that
Yeah,
is? Is that the
yeah.
2008,
In
2007, 2008 crash?
Yeah, so one of the not well remembered stories of 2007, 2008 is that all three major US auto companies went simultaneously bankrupt because of their asset-backed securities operations.
Right. Yeah.
And
Financialization. They had financialized. Right.
yes, they had
Yeah.
financialized, done it
Yep.
very
Yep.
badly, and ended up controlled by the U.S. government and eventually spun back out as public companies.
Got it. Okay.
So apparently the U.S. government running them was not good in the short term, but they seem to have recovered to a significant degree in the years afterwards. So
yeah, I wonder if they're
could
still
be worse.
dabbling heavily in financialization. But anyway, maybe the government
Yeah,
told them don't do that anymore.
yeah, I don't know.
Just make
I don't.
cars. Just make cars, Detroit. Don't get into banking.
So if we flip
Okay.
forward
Yeah,
again to
rail
our
freight.
last major chart here, again, rail freight, big proxy for both consumer and industrial activity. And you can see rail freight here is near record levels. So you're definitely not seeing absolute weakness in the U.S. economy, but you're
Mm-hmm.
also not seeing a U.S. economy that is in a period of rapid growth, right?
Right. Yeah.
So rail freight numbers here are very similar today to where they were in 2018. So there's definitely something to the statement that some elements of perceived U.S. economic growth are, they've got a little bit of fakeness to them.
Mm-hmm.
But at the same time, we're not seeing a U.S. economy in crisis. We're seeing
Yeah.
something
Yeah.
kind of.
This is not a collapse. It's still well.
Yeah.
The U.S. still remains a colossus on the world stage, and not just because it controls the global dollar money standard or whatever, right?
Yeah.
And the U.S. is a really productive economy, and it does have a sort of a commanding position, even with the growth of China and everything, right?
Yeah. Yeah.
Yeah, yeah.
And what you're looking at here is a U.S. economy that's pretty healthy in terms of compared to where it could be, right?
Yeah.
If you compare the 2024 to 2007 through 2009, it's a much healthier spot.
Yeah. Yeah.
So that's kind of a picture, a level set for where the U.S. economy is in terms of physical assets.
Yeah.
But if we flip to our last slide, this is where I think there's real merit to what our friend academic agent said.
Mm-hmm.
So what you're looking at here is a chart comparing price to earnings ratios on U.S. equities versus non-U.S. equities over a long period of time. And you can see in the period between sort of the late 90s and maybe 2010, there's a very tight correlation between PE ratios in the US and PE ratios everywhere else in the world.
And in
And
particular, you don't see the black line, which is the U.S., always towering above the blue line. It actually kind of trades back and forth a bit
yeah,
in terms of who's got the higher PE ratios, right?
yeah. Whereas in the period beginning sometime between 2010 and 2014, you see a delamination where
Yeah.
PE ratios in the US grow to be much, much larger than PE ratios in the rest of the world. And critically, they do so at the same time that interest rates tend to be higher in the United States than they are in the rest of the world. So if you think about that from a dividend discount model of equity pricing point of view, lower interest rates in the rest of the world should create higher PE ratios in the rest of the world, particularly in Europe, who in the period between sort of 2012 and 2020 has consistently lower rates than the US. So that's very, very surprising and very indicative of a kind of, well, there are a number of explanations here that form this piece of data. The first important thing here is that most of the world's global tech companies that are on very high PE ratios are U.S. companies nominally. we've talked about this. We talked about this when we talked about the tech crash of 2021, 2022. There are a lot of US tech companies that operate with like extraordinarily large P ratios you'd never see for an industrial company, and P ratios that are not well connected to their actual earnings growth. Um, there's a lot of reasons for that, but nevertheless, it's partly responsible for this gap.
So
But if
real quick on PE, because I remember Academic Agent mentioned something about tech companies that have never shown a profit, and there's sort of a game that goes on there, right?
yeah,
With something like Amazon. Um, does how does price to equity work? Like, what if they have
or
negative
price to
profits
earnings.
or price to earnings? Okay, and
Yeah.
earnings are
Earnings are profits. So if a company is
ah.
not profitable, the P ratio kind of breaks down or has near zero profit.
Well, I was going to
The
say, what if you're like negative every year because you're playing this whatever game Amazon's playing, right? Where it's
That's
investing all
right.
of its profits, then your PE is going to look really sky high.
Yes, even
Doesn't
though
necessarily mean you're not doing anything useful, right?
yeah. So P ratios are a measure of how equity prices should be formed. They're not
Mm,
the only or necessarily the best measure in
yeah,
every
yeah,
case.
right,
They're a measure that works really well for companies that are managed according to the traditional rules of the fiduciary responsibility of ownership,
right.
right? So, Amazon, Google, and com- Netflix is another company that really doesn't manage its business at all according to traditional rules of fiduciary responsibility.
Mm-hmm.
Um,
Yeah.
and you can make of that whatever you make of it. If my point of view is that the SEC should have gone after those boards years ago, but well, I mean, like if I was in charge of the U.S. government, the way Amazon conducts its business is a crime against its shareholders. But
Mm-hmm.
that's that's a perspective. There are other perspectives available.
Yeah, yeah.
Um, but even if you chop off the tech companies that have this unusual management strategy around retained earnings, you still see a significant gap between PE ratios of US companies and PE ratios of
Okay.
international companies.
Okay. Well, that I think you got to what I was really asking for is if you factor some of that Amazon craziness out, does that just collapse this distance between U.S. and Europe? And you're saying no, it's
No,
still quite divergent. Okay.
no. And there's a couple of reasons for that. Um, there's like the straightforward reason. If you look at the rest of the world, the rest of the world has a lot of countries in it. Not all of them have safe and secure capital markets. There's political risk in some of them that is larger than the United States.
Right.
Um, so it's not surprising that in a period where instability in the kind of periphery of the American empire is going up, that you would get some gap opening up. On the other hand, you have in this moment more than in maybe any other moment in my lifetime a scramble for US dollars and a scramble for US dollar denominated investments, which I think is contributing to the PE gap.
Mm-hmm.
Uh, because if you imagine yourself in the position of um, well, I used to use Gaddafi, but I guess he's dead. I need to find a new example.
Right.
But if you imagine yourself as like a U.S. client in one of these jurisdictions, you're going to want to have U.S. dollars, and you're probably not going to want to keep all of them in your mattress, um,
Yeah.
because you're the legitimate government of Algeria or whatever. You have the privilege to invest and not fear those investments be seized. And
Mm-hmm.
so the more of these people there are out there, the more demand there is for U.S. investments. And with very low yields on U.S. government bonds, it has become popular for these sovereign wealth funds to buy, U.S. equities instead.
So
So that
you could see, okay, so you could say, okay, U.S. has a real economy as we've just seen that is relatively solid, but watch out for the money you've got sitting in the stock market because, this gap that we're seeing here might collapse. On the other hand, where else is the money going to go?
Well,
Like what's a scenario you see where this collapses?
so this gap is an artifact of the U.S. imperial structure, right?
Okay.
So
Okay,
to
wait,
the
but it's starting around 2012. I mean, we had a U.S. imperial structure before then, right?
right, but the U.S. imperial structure had a lot more stability in the periphery for business than it does
Ah,
today,
got it.
right?
Okay.
So a lot of this just corresponds to negative business conditions. A lot of this just corresponds to grain, right? So
I'm
the
sorry, it
perception
corresponds to what word did you say?
to, to green, right?
To
So
green.
the perception that you can invest safely with a favorable business disposition from local governments in the periphery of the American empire is declining. Um, and it's declining in part because uh, the U.S. empire just wrecked huge numbers of business interests in many of its European colonies, right?
Gotcha.
By creating an energy crisis.
Right.
Uh, so a lot of this is an artifact of changes in the structure of the U.S. empire in that period.
Mm-hmm.
Um,
Okay.
so at least that would be my read on why
That's
you have a
interesting.
lot.
So, so you're saying a collapse of an empire, slow motion collapse of an empire, can at least temporarily have the center of the empire looking like it's doing better than ever.
Yeah.
And people living in, it's making me think of Hunger Games, right? People living in the capital city or whatever um, are living it up and maybe blissfully ignoring that the edges of the empire are doing worse and worse. And eventually, it may not work
Well,
out well for the center, but for the
how
moment,
how
party
that
on, right?
yeah, how that dynamic plays out, that's a set of predictions about the future.
Yeah,
Um,
right.
but empires go through cycles where they're more and less exploitive of the periphery.
Yeah.
Um, and the US, particularly with regard to its European possessions, has been a lot more exploitive in the period after 2012 than it was previously.
Right. And Trump's rhetoric isn't exactly, hey, we're going to slow down on the exploitation of the periphery. It's more like we're going to dial it up like you've never seen before, right?
Well, it's interesting because, like, one of the things we learned from all the USAID leaks is that a lot of the green movement in Europe is just financed by the US government. But
Uh-huh.
it's not like if the US government stops financing it, the green movement in it's very well locally established at this point.
Yeah.
So I don't really know exactly what happens if that policy changes at the center. Um, I just don't know, right?
Yeah.
Um, that's a set of analytical political questions that are kind of difficult to
Yeah.
untangle. Um, but it does mean that the it does mean that at least in the immediate term, the energy insecurity that the Trump administration is complaining about in Europe was also generated by the US empire. And so
Yes.
you have this very strange kind of situation where, one half of the empire is saying, carbon free future. And the other half of the empire is saying remilitarize, reindustrialize.
Yeah. Right.
Um, and that's a very strange dynamic for a lot of these vassals, and it'll be very interesting to see how it plays out. I guess
Yeah.
is probably the net. Um, Equally, when you have states that get into like the situation that Great Britain is now, where there are going to have to be a lot of there's going to have to be a lot of fiscal reform for investors in that country. You're going to see PE multiples contract because when states get into economic problems, they often leverage the power of the state against business assets in the country. So
Okay.
That hasn't tended to happen very much inside the American empire, but it has happened consistently through Latin America, through the periods where those countries have been in dispute. And it'll be, I I think the market is pricing in increasing uncertainty about how the equity investments in companies in a number of these jurisdictions are going to fare.
Yeah. Oh, so right. I was asking you about. Just want to make sure we cover this. I was asking you, what is the scenario where um, U.S. equities, U.S. stocks, I don't know about collapse, but the distance closes. The PE ratio distance closes. Um, I suppose one scenario would be that the rest of the world does better. Goes back to
Yeah.
having stability and so forth, right? Um, how likely that is, I don't know, but that would be that is. It doesn't have to be a collapse of the U.S. It could be and maybe most
Well,
likely a bit of both, right? A bit of
yeah.
some of the craziest of the PE ratios come down the U.S. and the rest of the world stabilizes.
But even if you just imagine a world where a lot of the where there are more stable business conditions in some of the alternative jurisdictions, P ratios will come down in the United States because capital will move from the United States to those jurisdictions, right? So you'll see a
Oh,
balancing of P ratios,
I see what you're saying. Yeah, yeah, yeah.
right?
Right.
Uh,
Right now,
and
everybody's
so,
throwing their money into the U.S.
yes,
Yeah, yeah.
whether they're Americans or not Americans,
Right.
there's a perception that the US is the safest place for your capital. Um, it has despite having politics that are kind of nominally crazy, it has politics that are very effectively protective of business interests.
Yeah, yeah.
Whereas the politics in Europe have not been very good for certain business interests for quite a while.
Right. And they're suffering from the occasional hit from the Death Star in the U.S. Right.
Well, I mean, the example of the destruction of Nord Stream is an example of politics that really adversely impacted a bunch of business interests,
Yep.
right? So if you are, I forget the name of the Dutch aluminum company, but the Dutch aluminum company had like an entire business model predicated on Russian gas. Well, that business model evaporated because of political changes. That doesn't happen in the US nearly as often as it happens in some of these countries. And that I think is responsible for some of the disparity in PE ratios at the moment.
Right. Okay. I was going to bring up a couple comments. Any other things you wanted to cover on the story?
No, I think that kind of gives us a level set for the US economy and gives us a sense as to what this difference in asset prices is really all about.
Right. Yeah. Thank you. Excellent. Okay. RD8 at Subscribestar sends in a tip. Keep up the good work, gents. Thank you. And also over on YouTube, he says the best bubble. You've never seen a bubble like this, folks.
Yeah.
That's funny. Okay. Okay. There were a few things that jumped out at me. Give me just a sec. Yeah, sorry for any connection problems. I am going to get back on the phone with my internet service provider after this. It's not dropping, but it's shaky. I'm hoping at least the audio is okay. Let's see.
Yeah, there's a comment here about the AI bubble that I included that in the analysis of the tech companies that have very large PE ratios.
Right.
So AI is definitely a part of that. So for better or for worse, I don't. I tend to have a negative view of the future prospects of those companies, but other views are available.
Yeah, yeah. Do you think Trump's erratic behavior could result in a consolidation into the heartland of the American empire? I'm thinking in economic terms here, outer empire being drained. Well, I think your point is that this has been going on for over a decade, and Trump isn't slowing it down, but he didn't start the fire either, right?
No, this has been going on for a while, and like COVID is another good example of this, where the reaction to COVID is much more severe in the peripheral nations than it is at the center of the empire. Um, the reaction to COVID is a very negative business condition for certain kinds of businesses. Um, and so there's a lot more stability inside the United States proper than there is in all of these peripheral countries.
Mm-hmm.
And this is like the reaction to COVID is partly under Trump, partly under Biden, but
Right.
like this isn't just Trump's talking about tariffs and he's driving a PE disparity between US companies and
Yeah.
international companies. This is a much longer history of behavior in the peripheral states of the US empire that is negative for business.
Yeah. I mean, it's been a consistent message of this show that the thing that you're just noticing is something that's probably been going on for years, right?
Yeah.
Which, if you're worried about sort of the Hoppian concerns about democracy being very, volatile as one temporary caretaker is replaced by another one for 4 years or whatever, I guess you could potentially take some comfort in seeing that there's a lot of continuities actually in the behavior of the empire and including these peripheral governments as well, like with the Green Movement and stuff, right? On the other hand, the things that have continuity seem to generally be like bad things,
Yeah.
not like good behaviors.
Yeah.
So
It's, yeah.
that's unfortunate. Russian Slopper says you should look into what composes the majority of the U.S. trade deficit. You'll find that it isn't foreign companies, but rather domestic companies who produce abroad. It's part of the grand system of U.S. financial hegemony. It finances the purchasing of capital in foreign countries through forcing those countries' central banks to purchase U.S. dollars. And I don't know if I've covered it with you, but I have covered this system on the channel with Nomad, I think, Distant Nomad.
Yeah.
How that kind of works, and Academic Agent has talked about it also. This strange sort of system where other countries holding U.S. debt makes the U.S. just more and more powerful.
Well, it's a straightforward Cantillon effect thing, right?
Mm-hmm.
So if the US government owns the printer and everybody else owns the dollars, the US government gets to spend the printed dollars first and gets to benefit from the consequences of inflation for all of these all these foreign holders. Because the US government tends to spend those dollars first domestically in the US. So it's a huge I mean, I call it the system for taxation of the empire, right?
Mm-hmm.
Where the number of dollars of U.S. denominated debt that a country is holding to stabilize its currency is an indication of the extent to which that country is implicitly paying tax into the people who hold the money printer.
Right. Yeah. Devilishly clever and complicated, I think.
Yeah.
Okay, what was those last things? Oh,
There's a last
Caravaggio. Go ahead.
There's a last set of comments here from FB Informant discussing the extent to which Europe has sovereignty in the area of energy, and I think this is like a difficult thing for people to get. So, like when we got all the documentation from USAID, we got hard receipts that the U.S. government has been for decades funding green movements all over the U.S. empire. Right?
And by the way, Black Horse, I'm learning this right now. I'd heard various things that coming out of the USAID. I was focused more on the immigration side. I completely missed the funding of the green movements. That's extremely interesting to me.
Yeah, they've been funding green movements. They've been funding immigration movements. They've been funding LGBTQ movements, all through basically anywhere on Earth where they thought their dollars could get impact. Mm-hmm. So the question is, to what extent does Europe have sovereignty in this area? Well, that depends on how effective you think funding advocacy organizations is at influencing policy in those countries. So the answer is, not zero, especially if the funding is applied consistently over a long period of time. The question is the answer is not 100%. There are definitely examples where well-funded advocacy groups don't get their way in politics.
Right.
So you're looking at a situation where the U.S. has partial sovereignty in all of these countries, um, and partial sovereignty through its kind of influence network, and partial sovereignty through its control of NATO. Um, and uh, interestingly, both of those networks are like only kind of vaguely controlled by the formal government of the U.S. Um, but they seem to be able to extract money to do whatever it is that they want to do from the U.S. taxpayer pretty readily.
Um, let's see. Oh yeah, Caravaggio, and then I'll wrap up here. Caravaggio says, I think Nordstrom was the big reveal in regards to U.S. policy towards Europe going forward. I'm sad to say that is, well, not just going forward, as you're illustrating here, right? As you're suggesting here, it's been going on before Nordstrom. But yes, it was a big reveal in my view.
Yeah, I think it's pretty clear at this point that the US government in the period after '08 viewed the European Union as a potential competitive elite class and
Mm-hmm.
took steps to prevent them from becoming a competitive elite class.
Yep.
And in my view, those steps were highly effective. Um,
Wow.
so
All right.
that that would be my broad view of that situation.
Then one more subscribe star tip slipped in from Sam153, very regular supporter and tipper. Welcome back. A run on olive oil it is. Extra virgin for sure. Cheers.
There
Thanks.
you go.
Thanks, Sam153, for your faithful support. Okay, I think we are all done for now. My plan is to continue next week with the series on the specialist relationship between Israel and the United States. I'm going to continue going through the Israel lobby by Mearsheimer and Walt, but I'm also getting so I want to get through that because that's sort of 101 material for this topic. But then I have some guests in mind to come on and bring a little more color to the relationship. As Academic Agent has been saying, who the power is, who's sovereign in the U.S. has become abundantly clear since October 7th. And so I wanted to kind of dig deep into this and understand that relationship because it seems to be a pretty important one. You may argue whether it's the top one or not, but it's certainly up there. So that's what I'll be covering next week. And then hopefully, if Black Horse is available, we'll be back together 2 weeks from today. All right. Thanks, everyone, and see you next time.